Hey everybody, it's Sean. Welcome back to another episode of Not Financial Advice. Today is Friday, April 26th, and on today's video, we're going to be talking about Sam Adams stock, which just smashed earnings with higher sales from their Twisted Tea lineup. We're going to get into the company, learn about the products that it offers, why I'm invested in it, and by the end of the video, I'm going to give you an estimate of the fair value for Sam shares. So stay tuned. We're going to dive into all that and more right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
All right, let's talk about Sam Adams stock. You might have drank their brand Truly in the past. Your family might get Oktoberfest every fall. Or you may not be aware of every product that Sam Adams offers. So let's start by taking a look at what role it plays in my investments. Um, right at about $672. Sam Adams is about 2.1% of my portfolio. I'm currently down on it by 21.4%, but the great earnings last night definitely give me heart and hope for this investment. So let's just start diving into it right now. I'll ask you to like the video, subscribe to the channel, and let's start by taking a look at its all-time stock chart, which is quite a doozy, as you can see. Um, I guess you can see this company and it looks like it's going to zero, especially when you see how much it's declined. And so pre-pandemic, the stock had run up because it really had a home run with Truly Hard Seltzer, which ended up being a fad, and the stock is down 78% from all-time highs. So, when you see a company like this, that's price is performing in this way, it can give some pause. But in the pre-market, it's up almost 8%. And so we got to look and see what their earnings were, what the result was. And so we're going to talk about it a little bit more in a second, but this is a pretty small company. It's a smaller mid-cap company. And so most recently they were expected to lose 8 cents, but they made 106. And so this is one that the market doesn't have a handle on. This is one that um, if it has a lot of analysts covering it, they're having a hard time predicting its future price performance. And so you saw an EPS beat of a cool 1,400%. And then you saw them beat revenue by 3.25%, reporting 426 million in revenue for their most recent quarter. So let's get over here to Qualtrim, a suite of software I use to analyze stocks, not one I'm affiliated with. I'll leave a link for Qualtrim in the description below. But what we can see here is Boston Beer shares are trading higher after the company reported better than expected Q1 financial results and issued/reiterated full year 2024 guidance. So what we can see to start is that this is a small cap company, 3.52 billion, pretty small company with a forward PE of 29, but that one can be a little bit deceptive. So let's keep looking through this. We see a healthy free cash flow yield of 5.3%. And what we can also see is that this is a company that tends to not carry any debt on its balance sheets. So this would definitely be, approximately a small value style stock. Typically, they perform well over time, but there can obviously be a lot of variation on a company to company basis. Let's get into our metrics here. Over the last 10 years, the company's top line revenues grown by about 10.5%, earning a thumbs up from me. We can see acceleration in the last 5 at closer to 15%. So let's keep going forward and let's take a look at their free cash flow. So taking a look at free cash flow, it was, let's see here, um, it was negative 10 years ago, so it doesn't give us the full rate. If you go back about 12 years, it's actually grown at about like 52% a year, which is a lot. Um, and what you can see here, though, over the last 5 is free cash flow growth closer to about 11.3%, which is quite good. So we'll give it a thumbs up. This was the whole Truly debacle that you see there. And so there can be some inconsistencies or some lack of predictability in the company, which is a risk factor, but also can be an opportunity to get better pricing on the stock. It is a consumer defensive. It's not cyclical in the broadest sense, but looking at earnings per share, I don't truly understand this. For whatever reason, they're pretty inconsistent, and they don't put up a tremendous amount of earnings per share necessarily. So the free cash or the EPS growth rather is less than 2%. It's a thumbs down from me. That can weigh on the price of the stock for more short-term orientated investors. But looking at the most recent quarter, they actually have about $205 million of cash. They did a $65 million stock repurchase, which takes us into our next metric, which is shares outstanding. So they buy them back. They just bought back, if I'm not completely mistaken, over 15% of their shares. Their shares should be showing at about 9.9 million. But looking at that trend, they buy back about 1% of their shares every year over the last 10, earning a thumbs up for not diluting shareholders. Now, when it comes to ratios, this is a little bit of a harder situation. They have returns on capital employed, which have been quite high have been decent in the past at around 20%, but we see a downward trajectory and their returns on capital are only about 10%. But because of the trajectory, I have to give it a thumbs down. And looking at profit margin, it's an even uglier picture. Bottom line profit margin of about 4% from last quarter, another thumbs down from me. And just because of some inconsistency here, I'm not going to be able to rate it on relative valuation, but we'll finish off by looking at expenses, which are going up and to the right, which isn't great. So that earns a last thumbs down from me. So now let's move forward. A lot of things to like about this company, a couple areas of concern. Let's take a look and just get a little bit more acquainted with Sam Adams or Boston Beer, the original craft brew beer company established in 1984 by founder Jim Koch. And so we can see they have five main product lines, which is their truly hard seltzer. Now, they also own Angry Orchard Hard Cider, which I think is a top three in that cider category. They own sort of a more niche craft brew house, Dogfish Head, which many have heard of, but then Twisted Tea, which should be a leader in the spiked tea market. And then, of course, their flagship line, Sam Adams Beer. So truly did great in 2019, but started having problems in 2022. And they're trying to work with that brand. But, one thing I've said to myself is, I do like some of their core brand, and I enjoyed Truly. They knocked it out of the park, and they had really, runaway earnings and revenue with that brand. And the thought that I have is that, based on just how consistent their revenue growth and their free cash flow was, even though the stock's down 78%, it's absolutely not going to zero. And if they did it with Truly, they could do it again. So they've tried some things, a brand partnership with Pepsi to make hard Mountain Dew, which was a lot of trust in this brand. Sam Adams being partnered with by Pepsi to go into what 10 years ago would have been a taboo topic. But then obviously they have their core line. So the Boston Lager, I don't like it. Now, a new growth area, what's emerging to be potentially a new growth area is low alcohol or non-alcoholic beer. You can see them sampling there. But then, of course, you have a lot of their other things. So they have summer beers or spring beers. So Cold Snap is a spring beer. They also have a beer Breakaway Blonde Ale I haven't heard of, which is another spring ale. But then you can see the way that they do their branding, beers of summer. To be honest, when I saw this is pretty inspired packaging: cherry wheat, pool party, hazy pale ale, summer ale, which is a pretty well known one, and then a porch rocker. That's a pretty attractive looking package. You could see people picking that up for the 4th of July, etc. So Sam Adams Oktoberfest is actually my only favorite beer from their core lineup. But again, they've got something for everyone, be it truly hard cider or hard seltzer rather, than Angry Orchard hard cider or Twisted Tea from the famous gas station Smackdown meme incident. all the way over to hard Mountain Dew or their core lineup, be it Sam Adams Boston Lager or my personal favorite Oktoberfest. And so those are some of the reasons that I own the company. Let's be reminded of its share price, currently trading at $287. I'm going to pull up our DCF calculator and we're going to get an idea of a fair value estimate on these shares. Just hang tight. All right, so a $287 stock. What we can see here is free cash flow. There were 2.5 out of the last 10 or 12 years that had negative free cash flow. So I went ahead and I actually averaged out the last 12 years, which included one significantly non free cash flow positive year and two minorly uh, years lower in a deficit. But over that 12-year period, there was something like 9 years that were positive in free cash flow. So I've averaged that, and I feel like that shows a more representative picture, putting up about $71 million in free cash flow per year, not a company that's going to zero. A smaller cap company. Currently, from their most recent earnings, they're sitting on $205.4 million of cash with no long-term debt. I do see shares, if I read the report right, at 9.98 million. Now, I've done some conservative assumptions here for the growth rate. $287 stock value, about 197. So that would be showing significantly overvalued at its lower level. So now what I want to do is I want to run the same valuation, but I want to lower the required rate of return. I think that looking at this company, you have a defensive, smaller to mid cap value company that has a track record of carrying zero debt, again, is in that defensive space, has a great core line of products as well as some pretty dominant position in some other categories. And then they're always coming up with the next great thing. And so I think it could be appropriate if you want to be a little bit friendlier on the valuation here to put it at that level, which would show the value of this $287 stock closer to 307.70. Now, when I average that with the previous valuation at a 10% required rate of return, that was 197.20, and that's showing a fair value estimate of about $252.45. So the stock's currently trading at 287. It would show it as slightly overvalued. I think that with my experience and all of the different variables that are hard for one person to understand, I think the value of the stock is around $252.45, give or take 15 or 20%. So I think it's trading near fair value. And I think there are, just from its total decline of 78%, as well as some of the successful results we saw this quarter, I think that there's upside for the stock. So I'm happy to hold here, but you can make your own decision. And I just want to thank you so much for tuning in. Again, Sean, not financial advice. I will see you on the next one.